Welcome to our Crypto News in 10, a daily podcast bringing you the latest news about crypto in under 10 minutes. Here's what's moving crypto today, Sunday, May 17th, 2026. Italy's largest bank more than doubles its digital asset exposure. Japan's top brokerages line up crypto investment trusts. Michael Saylor explains why MicroStrategy could sell strategically. President Trump's ethics filings show crypto-linked trades. And BlackRock's spot ETFs see a week of outflows. Let's get you caught up fast. First, a big European signal. Italy's largest bank, Intesa Sanpaolo, more than doubled its crypto exposure in the first quarter, from about $100 million at year-end to roughly $235 million by March 31st. According to Cointelegraph, the bank boosted Bitcoin positions via the RK21 Shares Fund and BlackRock's iShares Bitcoin Trust. It added Ethereum for the first time through the iShares staked Ethereum Trust and took a new stake in XRP via Grayscale's XRP Trust, around $26 million at current values. It also cut Solana sharply, slashing holdings in the Bitwise Solana staking ETF from roughly 266,000 shares to just under 3,000. And it even opened call options on BlackRock's IBIT. On the equity side, the bank increased its Coinbase exposure, and Ripple says it will provide custody services to the group. For Europe's traditional finance, that's a notable deepening of crypto reach. Why does this matter? When a universal bank with tens of millions of customers reallocates toward Bitcoin, Ethereum, and tokenized exposures, it often paves the way for product pipelines, custody build-outs, and distribution. And eventually, more mainstream participation. That's especially relevant under Europe's MiCA regime, where Euro stablecoin rails and tokenized funds are being standardized across the bloc. To Asia now, and it's a big one for retail access. According to Nikkei reporting highlighted by Cointelegraph, Japan's leading brokerages, SBI Securities and Rakuten Securities with Nomura, Daiwa, and SMBC in the wings, are preparing crypto investment trusts for regular investors. Think mutual fund-style crypto exposure inside existing securities accounts and smartphone apps, not standalone exchange accounts. The Financial Services Agency plans to revise the Investment Trust Act's enforcement order by 2028 to explicitly allow crypto in such trusts, and Japan has already reclassified crypto assets as financial instruments under the Financial Instruments and Exchange Act. Those steps could open the door to spot crypto ETFs later in the decade. If the distribution firepower of these houses comes online, Japan's retail on-ramps could look very different by the time the rules land. Story 3, a nuance with big implications. Michael Saylor says MicroStrategy's never sell mantra can actually impair Bitcoin's value if markets believe the firm would never, ever use its holdings. In a recent podcast appearance, Saylor argued that signaling the capacity to tap the market when needed protects both the company and the asset, framing potential selective sales as a way to inoculate the market and reinforce confidence, not abandon conviction. He noted the firm holds Bitcoin worth tens of billions of dollars and emphasized there's substantial independent liquidity in the asset that's uncorrelated with the company's equity or credit. It's a reminder that corporate treasury strategy isn't religion, it's risk management, and that clarity on intent can steady counterparties, lenders, and ratings views. Before we continue, here's a message from our sponsors.
Need elite developers fast? Elite Coders connects you with rigorously vetted senior engineers in 24 to 48 hours. Staff augmentation, dedicated teams, or full project delivery, we've got you covered. Visit elitecoders.co to get started today.
All right, let's get back to it. Fourth, politics meets portfolios. New federal ethics filings show President Trump reported thousands of first-quarter securities trades, including multiple crypto-linked names. The disclosures list Coinbase purchases, including one in the $100,001 to $500,000 bracket on February 10th, plus a Robinhood buy on March 17th above $100,000. There were also smaller buys and sells of Bitcoin miners like Marathon Digital and CleanSpark. A Trump Organization spokesperson told Decrypt the accounts are fully discretionary and managed by third-party institutions with sole authority over investment decisions. Regardless of one's politics, the takeaway for crypto is straightforward. The sector's equities, from exchanges to miners, are part of one of the most watched portfolios in the world, which will keep attention and scrutiny high. And rounding out the day, ETF flows. BlackRock's spot crypto products saw significant net redemptions over the past 5 sessions, about $654 million combined. Its flagship iShares Bitcoin Trust accounted for roughly $461 million of that, including a $284.7 million single-day outflow on May 13th. BlackRock's Ethereum funds shed roughly $193 million on the week. The backdrop: firmer treasury yields, sticky inflation worries, and broader risk-off pressures. Even so, cumulative net inflows since launch across US spot crypto ETFs remain deeply positive, so think of last week as a pause in the institutional bid rather than a structural reversal, unless macro stays tight. Quick recap: Italy's Intesa Sanpaolo upped its crypto exposure to about $235 million and added Ethereum and XRP while trimming Solana. Japan's biggest brokerages are building crypto investment trusts for mainstream distribution. Michael Saylor clarified why the ability to sell, selectively, can actually support Bitcoin's long-term case. President Trump's ethics filings show trades in Coinbase, Robinhood, and miners. And BlackRock's spot crypto ETFs posted about $650 million in weekly outflows amid macro jitters. That's your Sunday slate. Watch Europe's banks, Japan's distribution pipes, and ETF flows for the next directional cues. Thanks for listening and see you tomorrow.